call of Heranba Industries Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Raghuram K. Shetty, Managing Director, Mr. Ronak R. Shetty, Executive Director, and Mr. Rajkumar Bafna, Chief Financial Officer from the company. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Bhatia from Emkay Global Financial Services. Thank you, and over to you, sir.
Yeah, thanks, Zed. A very good morning to everyone. I would like to warmly welcome the management from Heranba and thank them for this opportunity. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Mr. Shetty, your lines are on mute, I believe.
Yeah, thank you. I am R.K. Shetty here. Hello to all and welcome to Heranba Q2FY22 results call. I take this opportunity to wish you all a happy Diwali and I'm pleased to report that we have maintained our growth momentum in the first half of FY22 by reporting a strong set of numbers. An increase of 14% in our revenues and an increase in our PAT in H1 FY22. Our continued growth trajectory in another half year and quarter shows a strong and resilient DNA that we are built on. We have a sharp uptick in our formulation sales this quarter, which formed 36% of total sales. In absolute terms, our formulation sales grew by 47.5% in FY22 on quarter-on-quarter basis. Out of this, domestic formulation sales accounted for a 58% quarter-on-quarter growth and exports accounted for 23% quarter growth. Our technical sale saw a growth of 5% year-on-year in Q2 FY22. Out of which domestic technical sales rose 17% year-on-year and exports saw a dip of 10% year-on-year. On a half-yearly basis, the technical sales saw a growth of 23% in H1 FY22. Out of a growth
sorry to interrupt, Mr. Shetty. Mr. Shetty, sorry to interrupt. There seems to be... Mr. Shetty, sorry to interrupt.
An increase of 7% year-on-year. We saw an increase.
Mr. Shetty, sorry to interrupt, but we are not able to hear you. Just a moment while we reconnect you again. Participants, request you all to please stay connected while we reconnect the management. Participants, apologies for the delay. We have the line now reconnected for the management. Mr. Shetty, you may please go ahead, sir.
I hope I'm audible now. let me start once again. Our total domestic sales in Q2FY22 saw an increase of 7% year-on-year, and in H1FY22 we saw an increase of 25%. On the export front, barring the freight and logistical challenges, business at broad level continue to perform well. On a long-term basis, the sector fundamentals continue to remain strong. I'm happy to announce that this October, we have sent our first consignment of our newly registered insecticide molecule to USA, which marks our entry into the highly regulated market. I'm very hopeful that our presence in this new geography will strengthen in the times to come. As mentioned in earlier calls, we intend to capitalize on opportunities generated by various technicals going off patent in the coming years by manufacturing and supplying generic variants of the technicals across the globe, putting greater emphasis to register these molecules in the regulated markets. Our surrogate since last quarter is progressing as planned, and we hope to reap its benefits very soon. Our broad capex plans are also on track, and I'm happy to announce that our Unit 4 plant in Vapi will commence in November end in 2021 this month. This unit will greatly complement our existing technical units in Vapi, reducing our external dependence as well as increasing capacity and improving bottom line to some extent. On clear call, which are and size. Two of these are in an advanced preview use in America. Registration sales and 18 to 20% EBITDA margins, as the company is well poised to build on the strong operations developed over the last few years. I am hopeful the company will continue to grow and surpass this milestone. FY22 as a critical year in Heranba's trajectory, and are optimistic of the future. This concludes my opening remark, and I will now hand over to Mr. Bafna, our CFO, to take you through the financials. Thank you.
Thank you, sir. Good evening, everyone. I would like to briefly touch upon the key performance highlights for the second quarter and half year September 2021. Then we'll open the floor for question and answers. On the revenue side, quarter 2 FY22 revenue at rupees 3,534 million versus 3,491 million in quarter 2 FY21, a growth of around 1% on year-on-year basis and growth of around 0.5% on quarter-on-quarter basis. H1 FY22 revenue at rupees 7,048 million versus 6,183 million in H1 FY21, a growth of around 14%. On the EBITDA side, quarter 2 FY22 EBITDA margin, including other income, at 18.77% versus 16.20% in quarter 2 FY21 and 19.66% in quarter 1 FY22. Quarter-on-quarter dip in margin was primarily due to increase in logistic cost and energy cost. H1 FY22 EBITDA margin, including other income, at 19.2% versus 16.2% in H1 FY21. Coming to the profit after tax, quarter 2 PAT was at rupees 4,456 million versus 377 million in quarter 2 FY21, an increase of around 21% year on year, and rupees 473 million in quarter 1 FY22. Quarter 2 FY22 PAT margin was at around 12.91% versus 10.8% in quarter 2 FY21 and 13.48% in quarter 1 FY22. H1 FY22 PAT at rupees 930 million versus 663 million in H1 FY21, an increase of around 40%. H1 FY22 PAT margin at around 13% versus 10.7% in H1 FY21. This resulted in the EPS being at rupees 11.4 per share during Q2 FY22 versus rupees 9.66 in Q2 FY21, an increase of around 18%. In rupees 23.24 during H1 FY22 versus 16.98 in H1 FY21, an increase of around 37% year-on-year basis. That concludes the update on financial, and we can open the floor for question and answer.
Thank you very much, Mr. Bafna. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 at this time. First question is from the line of Varshit Shah from Veto Capital. Please go ahead.
Thanks for the opportunity. So my first of all, congratulations on your first consignment to US and all the best for the geography. My question is on actually two fronts. First, on the technical domestic sales growth of 19% on a YOY basis. If I understand, we operate more in the insecticide segment where our Pyrethroid products lie. And the domestic insecticides market actually kind of suffered overall. So is there a differentiation between the Pyrethroid consumption in the Kharif season or particularly in Q2 and other insecticide consumption in the domestic market, and hence you have seen a higher growth? I'm just trying to correlate because your performance is slightly different from the otherwise industry insecticide sales. So that's my first question. Okay, let me rephrase my question. So you have reported 19% increase in domestic technical sales, and we manufacture a lot of insecticides in our portfolio. Now, the domestic end-use market has saw a decline actually in the insecticide on a YOY basis in Q2. So is there you have done exceptionally well, or the Pyrethroid segment overall has done well vis-a-vis other insecticides in the market, in the technical domestic market?
No, we will not say the Pyrethroid segment as such did exceptionally well. We had introduced two fungicides this year, and on a campaign basis made one high value insecticide also, just on a trial basis. So I think the molecules contributed to the.
So the new molecules basically help to ramp up the domestic part.
Yeah, we started it this year, so we did not go back. Definitely,
sure.
Time maybe next year we'll be able to.
Sure, that's helpful. And second is my question on the export front, especially on the technical side. So there's a YOY decline in this quarter. Now I understand there were container availability challenges, etc., at the industry level as well as for you. So is it just shifting of the revenue out of Q2 to maybe next quarter, or this is kind of a permanent loss? I mean, because there are still challenges on the logistical side. So what is your outlook on this?
Sure. So whatever.
Operator, actually, I can't hear anything.
Sorry.
So I don't know if.
Participants, request you all to please stay connected while we check for the management audio. Sorry for the delay. We have the line connected now for Mr. Shetty. Sir, you may go ahead.
It would be good.
Varshit?
Yeah.
You may continue with your question, sir.
Okay. Yeah, so my question was secondly on the domestic front. So on the export front, so we saw a YOY decline in exports and QOQ also. I mean, sort of a muted decline on the export front on the technical side. So my question is there a shift, just a delay in the shipments and hence the delay in booking of revenue in this quarter, and probably that will recover in third quarter, or this is a permanent loss? That's point one. And second, what is the reason for this slowdown in the export growth?
So there are two things. One would be the logistic issues that we are facing. So there's been delays in dispatches because of these logistical issues. That's why we focus more on domestic. It will not be a permanent loss. It is being, you can say it is delayed by a month or so. So maybe whatever is not visible in the last quarter will be visible in Q3. And some is switched to domestic.
Okay, so is it safe to assume that your Q3 exports YOY would be better than otherwise than the normal trend because of some revenue shifting out of Q2 to Q3 on a relative basis?
Yeah, could be.
Sure. One last question from my end to Bafna ji. Bafna ji, you alluded in your opening remarks regarding higher cost and especially on the transportation and freight, which resulted in higher SG&A expenses. So should we assume that the current level of SG&A expenses is the new normal and something which we should model going ahead in this range? Operator, am I connected?
Yes, we can hear you, Varshit. Mr. Shetty?
I think in the near future, we will have to consider the current elevated logistical cost will have to be considered.
So the Q might be at least the new normal, at least going into H2, if not longer.
Yes, sir.
Sure, I have more questions, but I'll get back in the queue.
Does that answer your question, Varshit?
Yeah, it does answer my
Thank
question.
you. Yes. Next question is from the line of Bhavya Gandhi from Dalal & Broacha. Please go ahead.
Yeah, thank you so much for taking my question and congratulations to management on stable set of numbers. So my first question is, how have Delta and Lambda performed?
Being stable.
Be stable. And sir, if you can quantify what would be the order size of our US consignment?
Order size in quantity?
No, but in value terms or in quantity terms.
Quantity you can say around 50 tons. Broken
50 tons.
Parts. Maybe,
Okay.
Around 70% would be in this quarter, in the coming quarter.
Okay. And sir, our domestic sales have seen an uptick on account. Is it on account of import substitution? And is it sustainable going forward, or is it just a one-off?
No, it is not import substitution. The focus was more in domestic because of the delays due to logistical issues. So instead of keeping inventory, we pushed more in domestic.
Okay. And sir, last question. There is acute food shortage in China. So China being one of the largest consumer of pyrethroids, are we focusing more on China now?
So we've always been focusing on China. We focus on all the geographies that we have for registration there.
Okay. At current run rate, sir, can we achieve our 18 to 20% guidance, revenue growth guidance?
Yes.
Okay. Yeah. Thank you so much, sir. I'll get back in with you.
Thank you.
Mr. Gandhi, does that answer your question?
Yes, you can go ahead.
Thank you. Next question is from the line of Imran Khan from Ratnatraya Capital. Please go ahead.
Hi, thanks for the opportunity. First of all, I just want to confirm that I am audible. Am I? Okay. Thank you. Sir, my question is on the capacity expansion side. Can you please tell us about the capacity expansion part, not in the long term, but in the immediate term, let's say this year, what kind of capacity you are putting and what kind of revenue it can generate?
What sort of capacity we are putting?
Yes.
On a year basis, you could say 100 tons.
Sorry, I missed that.
On a year basis, you can say 100 tons.
100 tons. So what would that mean in terms of revenue?
On an annual basis, around 500 tons.
500 tons. And what would it mean in terms of revenue potential? The incremental revenue potential?
To get back, don't have that calculation.
Okay, no problem. And on the second question is on the raw materials. Did you see any raw material price increases this quarter and maybe in the coming quarters? You feel that there will be a price increase?
Yes. There will be.
Sorry, I am unable to understand. I don't know, am I the only one?
No. Am I audible?
Now it is better, yeah.
So there will be a price increase. All the basic raw materials have gone up. So accordingly, there will be some price hikes in the final product also. So overall, there will be a price in both. There will be an impact in the sales also and in the cost also. Impact in the sense positive. Both will be positive.
Okay. All right. Thank you.
Thank you. Next question is from the line of Amaya Karambilkar from Kotak Investment Advisors Limited. Please go ahead. Amaya, your line is unmuted. You may go ahead, please. Mr. Amaya Karambilkar, you may go ahead with your question. As there is no response from the line of the current participant, we will move on to our next question, which is from the line of Ankit from Oculus Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. One thing that I wanted to ask was we have heard that synthetic pyrethroid prices have gone up a lot recently. It was mentioned by UPL also in the press release. So is it a margin accretive thing for us, or there are significant cost increase in raw material also that it will not impact our margin in a positive or negative way? If you can elaborate on that. And my another question is because we export technicals to China, and because of the pollution issues, there are some capacity constraints there. Some capacities are shutting down. So is that on the formulation side or on the technical side? So basically, will it be beneficial for our company in the long run? Thanks.
For the pyrethroid price increase, the cost has also gone up. But definitely, there will be some advantage that we may get in the coming quarter. Regarding the pollution issues in China, definitely there will be some benefits that we may get. But then we don't know, the bigger may get bigger. The bigger players there in China would also try to gain some share out of it. So we'll have some advantage, not a very big advantage. We'll not say like that. We'll be conservative. We'll try our best.
Okay. Thank you.
Thank you. Next question is from the line of Mukesh Panjwani from Value Securities. Please go ahead.
Yeah, sir. Congratulations for good set of number. Am I audible?
Yes.
Yeah. So my question is that by this increase in raw material price, would we be in a position to pass it on?
Yes.
Like, would we be able to maintain our EBITDA margin?
Yes.
Okay. And sir, would we be a beneficiary of this China Plus One theme? Our company?
Yeah, we will be.
Okay. That's all from my side. Thank you.
Thank you. Next question is from the line of Venkatesh Balasubramaniam from Tokyo Marine. Please go ahead.
Yeah, before I ask a few questions, I would like to give some suggestion to the management first. I would request them to make an effort and speak a little bit louder on the call because you are not really audible. So if you are hosting a call, it would be very useful if you could speak up a little louder. And secondly, it's a suggestion. I hope you take it in the positive spirit. When we ask, if anybody is asking a question, please don't answer only in monosyllables like, yes and no. If you could give a little bit more context to the answer, it would be useful. Otherwise, we really cannot make out anything. So this is a couple of suggestions. I request you to implement it going forward. It could be very useful for both analysts and investors. Now, coming to the three questions which I had, why exactly is your top line growth in this quarter? There's hardly any top line growth YOY. Is this in line with your guidance, or we are running a little bit? This quarter in itself was a little disappointing in terms of top line growth for the management. Now, if you could give some context, what was expected, what went wrong, and why the top line growth is less. The second question is, what is your guidance for top line, EBITDA, and profits for the current year? And the third thing is, if you look at your cash flow from operations, in the current quarter, your cash flow from operations has turned negative. Why exactly has it happened? Has there been a receivable pile-up? And if at all, how can it be resolved?
Okay. So, answering your first question, am I audible?
Yes, you are.
Okay. So, regarding why our top line has not grown, the reason is, one, the logistical issues, because of which there are delays in supplying in the export market. Second is, the domestic business this year had been a bit tepid. So, in the branded side, there had been some issues because of erratic rainfall. Otherwise, technicals, we were able to supply well in the B2B segment, but there were some issues in the B2C segment. That's why the branded business was affected, and after a point, people stopped purchasing because they also had inventory. So that led to this top line issue.
Okay. Now, on that related context, your answer to the first question, this logistical problems, which is basically availability of containers and all those things, it's an industry-wide phenomenon. How is the situation now? I mean, is it getting resolved or is it getting worse? And is there a possibility it can impact the third quarter result also?
To some extent, it is getting resolved.
Okay.
Because now the customers have also become smarter. They have realized that they have to book in advance if they want their material on time in their market. So customers have started buying early. So that is one change that we have seen.
Okay.
And also there are some improvement in the logistics front. However, now the cost-wise, anyways, it has gone up. So there will be some cost impact, but availability is better than last quarter.
Okay.
And the stocks that have been lying, in the earlier, now I'll answer your third question also. That is, why are we net cash flow negative?
Yeah.
So we have receivables as well as inventory. Higher inventories. One reason for it is the logistic issues again, because there are delays in supplying this inventory in the export market, which will move in the current quarter, that is quarter 3. And receivables also, is anyways Q2 generally we have higher sales. So it's, the receivables, you see a better movement in the quarter three.
Okay. Okay, that was a very useful answer. If you could address the second question, which was like, what exactly? Yeah.
I'm sorry. What was your second question?
The second question is, what is your guidance for sales, EBITDA, and profits for the current year? That is, if at all you have a guidance.
We've always said that our growth is in range of 18 to 20%, and we'll be able to meet that. We feel we'll be able to maintain that kind of growth also, and EBITDA margins also we will maintain in the range of 18 to 20%.
Okay. Thank you very much. All the very best for the future.
Really sorry that we were not answering properly. We felt it was a short answer only that was asked. So we did not give any brief reply. We gave a smaller reply to it.
No, usually, I mean, I guess this is perhaps one of your first few calls after the IPO. But usually the thing is, a new company, we are all looking for a little more detail, little more context. So what happens is, if you give us that context that, for example, yes, somebody asked that have raw material prices gone up? So the immediate thing is, one can either say, okay, yes, prices have gone up. But the fact of the matter also is that if the raw material prices have gone up, immediately does that impact margins? Which is not what you are telling. Margins are not impacted. So maybe a little bit of context that, yes, your contracts with your clients allow you to pass through the raw material prices. If you give us that kind of a context, the interpretation is much better. So that is why I was making that suggestion.
So thank you very much for the suggestion. We'll definitely improve on it.
Yeah. All the very best for the future.
Thank you. Next question is from the line of Amanjeet Singh from Oculus Capital. Please go ahead.
Yeah. Sir, am I audible?
Yes.
Yeah. Sir, actually, I just wanted some clarity on your capex. I've gone through the past few calls, and you mentioned that your capex will be about 250 crore over 3 years. Sir, for Sarigram, how much would be your capex? Would it be 200, 220? Or because in your press release you said it would be about 100 crores. And what would be the capacity that you're expecting at Sarigram? And in what phases do you expect the Sarigram capacity to come in? So that's my first question on capex. And on the second bit, sir, in Dahej, in your press release, you had put the capacity would be about 10,680 metric tons, but you are expecting that capacity also to have commercial production by September 22. So does that also come in the capex guidance you've given in the previous years? I wasn't able to reconcile. Could you please help me do that?
Initially, when we used to say that our capex plans would be in the range of 150 crores, which we increased to 250 crores lately in 3 years.
Okay.
So in that we feel that Sarigram we would have a capex of around 180 crores, and the rest would be in the first phase we'll say our focus would be more on Sarigram. So once Sarigram facility is fully operational, we'll be focusing more on our Saika facility. So we would, however, do a basic building of infrastructure in Saika also, to the tune of around maybe 50 crores.
Okay, so if I get you correctly, out of the 250 crores, approximately 180 crores is for Sarigram and 70 crores is for Dahej, correct?
Yes.
Right. So in Sarigram, what is the capacity that you are expecting? Is it 24,900 metric ton? And by when will that full capacity come in, sir?
No, it is not 24,900. We'll say in the first phase, we'll come up with around 5,000-6,000 tons, take it up to 10,000. And then as and when we see better scope growth, we'll increase our capacity. Definitely, the 24,000 tons, I don't know where this figure has come. I think it is from the east.
So it's from your press release, sir. It's from your press release that you've given.
Based on EC. Okay. So in that we've changed some product profile. So where we'll be focusing on some higher value molecules. So this quantity may not come in. Initially, we were thinking of some intermediate, which we have changed now. So maybe to the tune of around 15,000 tons, we may go up to 15,000 tons.
Okay, so the phase 1, which is 5,000 to 6,000, so that would come in when, sir? By what period are you expecting?
Next year.
So the end of financial year, sir, you're talking about exit?
Next year as in Q2FY23.
Q2FY23. Okay. And so the next, when you said taking it to 10,000, do you mean additional 10,000 or the 5,000-6,000 will go to 10,000?
6,000 would go to 10,000. 10,000, and we are saying conservative. It would be higher. Maybe next FY24 we may even touch 12,000-13,000.
Okay. So your total capacity would be, your total capex for all of this till phase 1 and phase 2, that is 180, right? Till phase 2?
Yes.
Okay. Thank you, sir. And so this unit 4, so what was the capex spend on that at Vapi?
That'd be around 15 to 20 crores.
Okay. So and how much has this increased the capacity?
On an average basis, around capacity would be I think around 500-700 tons, and maximum we could touch to around 1,200 tons.
Okay. Thank you so much, sir. Thank you. That's it from my side, Dr.
Thank you. Next question is from the line of Kunal Bhatia from Dalal & Broacha. Please go ahead.
Yeah, sir. Thank you for the opportunity. And yeah, I agree to the previous participant that please, I request to use a better audio next time because it's very difficult to get the answers. Sir, coming to the question, sir, we have seen a gross margin improvement on a quarter-on-quarter basis as well as on a YOY basis. So if you could just be more elaborative on what was the specific reason for this, sir, because 2-3 things to be taken from your call is, one, you also mentioned that we sold newer molecules this time, and also there was less of exports. So just wanted to understand that whether what has been driving these gross margins, because has it been that you have been able to take price increases on the existing previous products wherein you could mitigate the 100% cost escalation? Secondly, were the newer molecule contribution significant enough that we got these kind of gross margin improvement? If you could give a bit more color on that, and going forward also with the kind of inflation that has already come in, will we be able to take the price increases as much as required to mitigate those on our gross margin side?
So for the first question, the new products that we have launched definitely have better margins, as well as we are continuously working on our existing molecules also. So there are some process improvements in some of the products, 2-3 products that we used to make on a campaign basis, which we have increased this year. That has also helped us. And in the branded segment also, we are able to push better molecules in the initial phase before things started becoming dull in the branded segment. So overall, it helped our gross margins.
Sir, but anything specific to call out? Does a lower exports helps us on gross margins, or it is the other way around?
No, nothing like that. Margins across, we have a dedicated team which looks into this pricing segment. So there's a minimum price that we keep, irrespective of which market. So that won't affect whether export or local. We need that minimum price. Does that answer your question?
Yeah, and sir, and if I may ask, these newer products, Delta, Lambda, which was say introduced a few years back. So how much has been the contribution from those products vis-a-vis the legacy products?
Which products you mean to say? Delta, Lambda?
Yeah.
Delta, anyways, Delta today is our top molecule. We sell when it comes to revenue, not volume. Volume would be Cyper, but Delta, as far as sales is concerned, Delta is our number one product today. And Lambda, you could say, would be a number 4 product. Number 4 product. So from some 20 tons per month, we have scaled it up to 60 tons per month today.
Okay. So even those would have contributed to a better gross margins, if I'm not wrong, sir.
Yeah. Secondly, formulation has improved. If you see overall, our formulation export has increased substantially year on year for the last half year, last 2 quarters. That increased the margin of overall margin.
Because initially we used to sell technicals, so definitely formulation also adds to the margin, because the base is kept the same plus some value addition we get while selling formulations. And the newer molecules, even though they are small, may not contribute to the entire turnover in a big way, but they also have a better margin profile.
Okay. So to conclude, the current gross margin which we have reached, 36 odd%, is that the new normal which we can consider, or we would go back to a lower gross margin per se?
That you can consider a new normal, because on 36% we've been able to, over at least last 1 year, able to maintain around 18% EBITDA.
Right, sir.
Yeah. So we feel we may be able to improve also, but for now we'll stick to 36% and 18%, because we've been guiding 18 to 20. So that's our thought.
Okay. And sir, thanks for mentioning about Delta and Lambda. So how about the newer molecule contribution, the molecules, or rather the products which are introduced in the last 1 or 2 years? How much has their contribution increased to in the current year?
Contribution, see, one product which we've launched last year we had launched that product. We used to make around 50 tons. Now we've scaled it up to around 120 metric tons. Our intermediate also, which we used to make around 200, we have increased it to 350. So that way, definitely, we have been able to increase our volumes by increasing our capacities, by debottlenecking our existing facility to some extent. And once we shift to our new facility in Sarigam, there would be a better scope to increase the volumes of our new molecules that we've launched this year as well. This year, or maybe last year in the second half.
Okay, so that sounds good. Yes, that's it from my side. Thank you so much.
Thank you.
Thank you. Next question is from the line of Dhaval Shah from Swan Investments. Please go ahead.
Yeah. Of the previous product, there's no difference in terms of between domestic and import business?
Sorry, Mr. Shah, but your voice is slightly breaking.
Hello.
Yeah, Mr. Shah.
Yeah, am I audible now?
Yes, better. Please go ahead.
Yeah, sir. Is there a large variation in margins between exports and domestic, or it's nearly the same?
Almost the same.
Sorry?
It'll be some difference, but you can say in this range only.
Okay. Got it. And in terms of between selling technicals in exports and formulations in the export market, can you little bit explain us in terms of the customer? When would a customer buy a technical, or when would a customer go for buying formulations?
It depends on the customer only.
If he has got the facility to formulate his technicals,
Mm-hmm.
if he has got a facility to formulate his own, then he will buy technical, wherein the logistic element is less there. So formulation, suppose if it is 10%, it is technical is 110. The technical formulation is multiplied. So that's it.
Got it. And which geographies would we be selling more formulations?
In Africa, it is mostly formulation. In rest of the areas, it is mostly technical.
In Africa, to some extent, CIS and Middle East.
Got it. Because generally, would a customer in Europe or somewhere in Asia would buy more of formulations? Because logically, buying formulations more like it's mixing water and something else also with the technical and then making the final product. So it's a little expensive, to export to buy formulation ready-made for the customer. Is my understanding correct?
So if it is if it is a basic formulation, then yes, correct. But if it is a specialized formulation, then they prefer buying it from those who know to make specialized formulations. For example, normal EC formulation, they'll make it in-house. But for a WDG formulation, they may rely on India or they may rely on China. So in that case.
For your information, we have all the chemistry, all the formulations we can make. The newer molecule, newer chemistry also, we are in-house facility to manufacture. It's our Sarigam plant.
Okay. And so Sarigam so post factory going live in the second quarter 23, as you just mentioned, will our margin range be also superior?
It will be in this range.
Okay.
Multiple segments, so we cannot exactly say whether it will go up. If some segment does not perform well, it somewhere comes in this range. With the growth and the EBITDA margins that we have guided, we will be able to maintain that kind of growth and EBITDA margin.
Okay. And sir, in terms of our say 2 to 3 year plan, our product mix and focus of the company would be what? We would be focusing on the current chemistry or launch a new product, or as a goal, do we want to create leadership in all of molecules which are large volume leadership? What is the
The existing one, we will take the leadership position. We will continue to maintain the leadership position.
Mm-hmm.
In the Sarigam side, it will be a mix of older molecules as well as the newer molecules. It's a big site, so we will do both.
Okay.
Does that answer the question?
Yes, it does. Thank you.
Next question is from the line of Varshit Shah from Veto Capital. Please go ahead.
Hi, thanks for the follow-up. So just one question on the export side. So you mentioned you started exporting it to US. What is the full potential you're expecting from this geography, and by what time you think that you'll be able to at least reach the phase 1 of your internal target, maybe by next year or so?
I think in the longer term, maybe 3 years down, 3 to 5 years down the line, we should be able to touch around $25 million. That's the goal. Immediate future completely depends on what registrations and how quickly we get these registrations. So today we have only one registration. So then it depends on the geography as well, the customer capacity and the geography. So immediate will not put a figure, but longer term we feel around $25 million will be our goal.
Sure. And secondly, in terms of the type of customer in this geography, so would it be a locally formulated company? Because I mean, US market is a more consolidated market on the brand side. I just wanted to understand the color of the customer. What kind of customer you feel that the geography would cater to from our perspective?
Could be both. Depends on the customer only. So many times they wish to take formulation. Today, because of logistics, even they prefer technical and formulating in USA. That is what they are doing today. That is what our existing customer told us. Maybe in future they'd be interested to take formulations also from us.
Sure. And my second question on the same geography, I mean on US. So if you to see, typically we are competing on the cost front because of backward integration in other geographies. Is the trend similar in US as well? So we are competing on the pricing front because of our backward integration vis-a-vis the competition, because the products which you are exporting into US, I think one of our competitors is also already present there. So and still you are able to sell incrementally. So is the pricing also a key role because of the backward integration?
Both. Pricing plays a key role. Definitely there is competition. And also because we are backward integrated, we have some advantage. So that is what we are able to, that is what helped us get the order also.
Sure. That's really helpful. Thanks and all the best for Q3.
Thank you.
Thank you. Next question is a follow-up from Imran Khan from Ratnatraya Capital. Please go ahead.
Hi, thanks for the opportunity again. Sir, you have provided a nice breakup for your, capacity expansion at Sarika. Can you please also do the same thing for Dahej and Saika, if it is possible?
Currently, we have not put a lot of thought to that side.
Okay.
First priority is to completely utilize and bring up the Sarigam facility. In Dahej, we will be taking it up for the civil and all, but we have not exactly thought which product. For the entire site, we have not thought. So giving an exact figure for the entire site would be tough.
But in 2 months, we will give a guideline for Saika project, Dahej project also.
We have some thoughts for some products, but not for the entire site.
Completely understand it, sir. And the second question is an optional question. I mean, if you feel you don't have to answer, please feel free to don't answer. But I've been reading about this thing in in your prospectus and other areas in media, that there has been a default of about 50 crore rupees on debt by the promoter, in a different company, I think. So would you like to explain that? I mean, what kind of default it was? What is intentional, or what is it was just a mismatch of cash flows in some of the other companies?
See, this is a old story actually. The very purpose of this public issue was one of our director had he had one company and it did not go well, and it is out of the OFS that money, that whatever amount is cleared, and the day he got the money out of the OFS money.
No, sir, I completely understand it that you have cleared it. My point is that why it has happened. Was it a situation in the business which has ended up into troubles, or it has to do something personal on a personal level? This is what I'm asking.
This was a pharmaceutical intermediate company he had started. It did not, for certain reason, it didn't go well, and there was a small outstanding, and he tried his own best to clear. But out of the OFS, he cleared the day one. In few days only, he has cleared that amount. And had it been intentional, it would not have happened. It is cleared long back, and it is not a part of Heranba. He is involved in this company, one of the directors. That's all. That is a relation between Heranba and his company. That company.
Completely get it, sir. Thank you. Thanks.
Thank you very much. Next question is on the line of Harsh, an retail investor. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Thank you, sir, for taking my question. Just a request for the operator that if there are questions in the queue, do not let participants ask follow-up questions and first address the questions which are there in the queue from the start. Now, anyway, here are my two questions. So, I've looked at your financials, and the asset turns for Heranba are quite high at around 6.5 times of gross block. However, and so what is the reason for such high asset turns, especially when asset turns for your competitors like Tagros and Imani are just around 2 to 3 times? So, we'd just like to know why such a huge gap.
Okay. Asset turns is higher because we are into formulations as well. And the competitors that you mentioned are not into formulations in a big way. We have a focus segment in formulation, both B2B and B2C, and they are quite asset light.
Okay. And second question is, sir, what could be the competitive advantage of the company in the Pyrethroid segment? So there are various competitors. UPL is there. So what is the competitive advantage in that segment? And just a follow-up on that, so we are also entering into the non-Pyrethroid segment. So which are the products that we are entering into, and what would be the competitive advantage of the company in those segments?
Competitive advantages, we are fully backward integrated, fully forward integrated, and we have registrations in, now you can say, across the globe. Earlier we would not say US, Europe, but now we are there everywhere. That's our competitive advantage. So we are not dependent on any particular geography. If one is not performing, we have another facility, another geography to cater. That supports us. Our facility is fully fungible. We can switch to whichever product is making more sense to us. And for our new molecules, also we have thought in all directions as such. If you see, immediately we may come up with some insecticide and fungicide products in our new facility. And the competitive advantages, what is our R&D and our production capabilities. So we've been in this production segment for a really long time now. We have a very good team. We have a very good R&D facility as well. So that is going to support the next non-pyrethroid phase growth.
Okay, and which segment are we entering into exactly in the non-pyrethroid segment?
In insecticides, maybe organophosphorus we've thought of, and a few fungicides.
Okay. Yeah, this was very helpful, sir. Thank you.
Thank you very much. Next question is from the line of Raj Shah, an individual investor. Please go ahead.
Am I audible, operator?
Yes, Mr. Shah, you are audible.
Okay. So my question was, as mentioned in your DRHP, the pyrethroids market, Indian pyrethroids market, has grown at around compounded annual growth rate of around 7% over the last few years. So my question was, how has our company Heranba managed to maintain this growth rate of around 18 to 20%? So how is this managed?
So one thing is, Pyrethroid as an entire segment is growing at 7%. We are not there in entire Pyrethroid segment. Our base is smaller, and once we've been able to increase our capacities for the existing products, increase the number of products in the Pyrethroid segment, get more registration across the globe, that has helped us keep a higher growth trajectory in the Pyrethroid segment. And 7% is for the multinationals who are into the branded segment who are selling. They have been able to grow at around 5 to 7% over the last 10 years. So that is the advantage that we've got.
Okay. Okay. And another question was, can you please help on the figures in terms of revenue mix in terms of insecticide, herbicide, and fungicide?
Revenue mix,
Yeah.
you can say around 80% is insecticide.
Okay.
And rest you can say around 15% is fungicide, and 5% would be
5% would be
herbicide.
okay. Okay.
Herbicide and others.
Right. Right. Lastly, I would also like to ask. As we have read in your DRHP that pyrethroids have an inherent limitation that when it comes to open source, so there is a problem of photo degeneration as well as increasing resistance from other pests. So how will this affect our company, and is any promotion being done by the government's end for pyrethroids?
Currently, we will not. Resistance as such is developed for almost every chemical if you use in excess.
Mm-hmm.
So we always tell our end consumers also, because we are in the branded segment, we tell them not to use the same chemicals back to back. You have to keep alternating between chemicals. So that is very critical. Even medicines, if you see, you have to do that. You cannot take the same thing again and again. I don't think there has been major resistance issues across the globe. That's why we've been, and even bigger multinationals have been projecting better growth for pyrethroid segment.
And the combination products also helps. In the formulation, there's so many combination products coming in the market now, and we also launched a few combinations. Not one product, the two product mix and sprays. That also we got a few registrations. That helps this problem, resistance issue.
We having multiple mode of action. Combination with different mode of action helps in breaking the resistance.
Okay. Okay. And my last question would be, going forward, how do we see our revenue mix in terms of pyrethroids and non-pyrethroids? So presently, as mentioned in your previous call, it is around 65% from pyrethroids. So going forward, how will this figure turn?
So it is around 65, may come down to around 57, around 3-5 years down the line.
Okay. And will it have a positive effect on our margins?
Yes. It's not because pyrethroid as such is coming down. We are also increasing our pyrethroid segment, but the other molecules, because the base is smaller, will have a bigger impact. That's why. So on a bigger turnover, we'll be able to maintain around 57% odd for pyrethroid segment.
Okay. By FY22 end.
FY, you consider 3 years down the line.
Okay. Okay. Thank you so much. That's it from my end.
Thank you. We'll take a last question now, which is from the line of Rishabh Sood, an investor. Please go ahead.
Thank you, management and operator, for answering the question. I just wanted to clarify, because of the audio issue, I couldn't get the update on the US consignment. Sir, can you please give the details on that, the quantity and the price as well, which you were talking about?
We'll not be able to give such data. Quantity, you can say around 50 odd ton we've been able to get an order. It's a small order.
In the beginning, we got the registration recently, and the order booking has started, and we have shipped one consignment already.
Okay. Okay, this is regarding which segment?
The pyrethroid.
Pyrethroid, okay. And for the capex plans, you said 250 crores of capex in the next 2 to 3 years. So for unit 1, phase 1, you were talking about 5,000 to 6,000 tons. So for 5,000 to 6,000 tons, that was for 180 crores.
No, entire 180 crores.
Okay, so phase 1 and phase 2 were for Sarigram plant.
Sarigram.
Okay. Okay, and Okay. And also, sir, in the previous question, you were saying in the goal to reach is $25 million. Can you please clarify what was the $25 million goal, as in the revenue or
The question asked was, in US, what would be your target to reach in the next in the on a mid-term basis? So we said around $25 million would be our target.
Okay. In the next 3 to 4 years, should we expect that?
Say 3 to 5 years, yes. We should. It all depends on how quickly we get registrations and all. So we feel over the next 3 to 5 years, we may be able to reach around that figure, if not somewhere in around that figure.
Order size of $25 million.
Yeah.
Okay. Okay, sir. That's it. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments. Over to you.
Yeah. Thank you very much. And at the same time, sorry for the audio issue we were facing. Maybe one reason is today we are at factory. For yesterday there was a board meeting here in factory in the registered office. So we had some other work in the factory, and the audio issue was a bit problematic to the listeners, viewers, attendees. So I'm extremely sorry, and thank you very much for showing interest. And I wish you a happy Deepavali to all the participants and their families.
Thank you very much, members of management. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.